Good morning, everyone, and welcome to another video of mine this morning. Um, in today's video, I'll be walking us through two things: analysis and first the asset basket selection. Like, okay, what are we trading for this week? How do we know what we are trading for this week? Or better still, what system do we put in place in order for us to be able to select what you are trading for this week? Now, before I do anything, I'm sure we all can see my screen. I'm on a web application which I created, presently being used by myself, and I intend to like make it to be usable by the public, right? By the public, by traders, right? But that's one thing aside, right? Now, what's the ideology behind this asset basket? So, assistance, right? And what's the ideology behind it? You know, something about forex trading is over time, I've noticed this chase effect, whereby from one currency pair to another, from one commodity to another, from one crypto asset to another, we are just here and there, and we are never there. Are you with me? We are just here and there, and we are never there. Or there's this ideology that okay, focus on one particular financial asset, focus on one forex pair, and all of those type of advice. But it has made me to like come to the realization that okay, rather than trying to focus on one or two, or rather than trying to run from one point to the other, why not set a system in place, right? Why not set a system in place that run through some preset rules, right? And then based on this preset rule, week in, week out, gives you an asset basket to trade with, gives you an asset basket to trade with, right? So on that note, I was able to like come up with this web application NineFactor. So it runs a nine-factor rule, right? Check different currency pair, all of them simultaneously, checking them through some preset rules, right? Fundamentals, the volume base, seasonality, and other rules, right? Which I'm going to be explaining later in later videos. But yes, that's just it. So it helped me in knowing assets to be focusing on. What should I put in my watch list? What should I put in my asset basket and whatnot? So I did the last one on Friday, on Saturday, that was like 2 days ago, right? That was the last one, as you can see here. Okay, on Friday, the last one was May 1st, 2025 at 12:03. That was when I did the last one. And then when I did the last one, it gave me this asset to be looking at. It gave me this asset to be looking at. Now, today being the new week, I'm going to like run a new um analysis, right? I'm going to run a new analysis, and then we're going to look at okay, what page should we be looking at for this week, right? What page should we be looking at for this week? And then once it's midweek again, we run the analysis again and check the confirm the relevance or the dependence. How much can we depend on Monday's results and all of those things? So that's the situation right now. That's the situation right now. Right now is at the testing phase. I'm presently testing it, utilizing it to guide my trade, and I'm looking to onboard other traders who will be helping in testing. So if you're interested, you can just drop interested in the comment section, and then you can drop interested in the comment section, and then we'll go from there. We'll go from there. I'll see how I can possibly add you to be one of the testers. So um, to run a new basket, we just go to basket output. All right. So we are in basket output address. Now these are the analysis, right? You can check for each one of them, but let's just go on to run a new analysis, right? So let's go on to run a new analysis. So we're going to be running our analysis on different asset class as defined here. We have the forex pair, we have commodities, and then we have the digital assets. We're going to be running it on all three of them. And so it's going to take some few seconds, right? It's going to take some few seconds. This web application is actually not just a standalone web application. It's not just based on logic alone. It's also integrated with an AI, right? It's integrated with an AI that runs through the nine factors also, right? It's integrated with an AI that runs through the nine factors. So what this does, it just gives you a pair you can go on to analyze. It's not trying to tell you that you should enter a trade immediately or whatnot. Your analysis, your entries, and everything is solely your responsibility. It is solely your responsibility. What it just does for you is week in, week out, it helps you mitigate the randomness, right? It helps you mitigate the randomness. Rather than doing things randomly, it gives you that, okay, this is the reason this selected, this is the reason that selected, and then what you are doing is what you are trading based on a set system. You are trading based on a set system, which is well defined, very, very well defined, very, very well defined. So I'm just running the analysis now. Whatever it gives us, we are going to modify our watch list to suit the output. We're going to modify our watch list to suit the output. Yes. Okay. So while we take a few seconds, while we wait for the few seconds to be completed, I'm sure that some of you have the question of, oh, won't this be making me like miss opportunity or something like that? What if gold is trending, or what if gold is actually moving? The ideology of um trying to like trade every time and all of those things, trade all time and stuff like that. So you see, something is this helps you to be a systematic trader. It's not someone that is chasing or someone that is trying to make XYZ in a short period of time. It helps you to be systematic. It helps you to be a risk analyzer. Are you with me? It helps you to be able to trade right, not to just trade. It helps you to trade right, right? So you're not here and there. You're not here and there. You don't have to trade gold every time. You don't have to trade gold every time. Gold does not trend every time. Obviously, oh, you can see your 100 pips, your 200 pips movement on gold. But trust me, you want a situation whereby you can actually see your 1,000 pips. You want something that gives you that, oh, on your currency pair, you want something that can give you the confidence of, oh, I'm going to enter a trade here, and my confidence level is that it's going to go on for days, for hours, for weeks, and you are confident about it, right? It's not like so until it tells you that okay, it's not valid anymore. That's when you can say, okay, let me look at other pair. Do you understand? So you can properly manage your risk. If you are someone that want to do if you're a swing trader, you can properly manage your risks around swinging. If you're a day trader, you can properly manage your risks around day trading. But at least you're trading a trending market, or you're trading a market that had met some set rules, which I'm going to be explaining in some later videos, It's taking time to run through the asset basket. It's taking time to run through the asset basket. So it's going to run through the currency pairs, it's going to run through this commodity, and then it's going to run through the digital assets, right? So let's just go to the chart and come back to that later. Now, I don't know whether it's going to give us gold to be part of our trade to be traded. I don't know whether it's going to give us gold for this week. I don't know whether it's going to give us gold for this week. I don't know that for sure. Um, because of how gold had been trading, I don't know that for sure. But if you check my previous video about gold, starting from the daily time frame, right? I was saying something about this the 5 week mid midpoint in my first video, I believe, the 5 week midpoint, and then we closed below it on a daily time frame. So what happened over the course of last week was we retraced back to it, right? And then now we are going down, but that does not mean that okay, are we going to like create a new low or something like that? We are not sure of that yet. We are not sure of that yet because the market is giving us some sort of higher highs and whatnot around here. It's giving us some sort of higher highs and whatnot around here. So we just have to ensure that we break the most recent structure that the market is giving us before we can be confident on a sell again. And on that note, it just means that we have to break this midpoint here. It's from the 1 hour time frame of 15 minutes, I believe so. It's from the 1 hour time frame of 15 minutes. So we have to break it. Let me see. I think we should be done. Yes. All right. So we are done with our asset basket run. So it's giving us SAUSD, GBP USD, USD CAD, and BTC USD. And then on the watch list, we have Euro USD. On the watch list, we have Euro USD. And I'm sure you're asking yourself a question that, oh, what about the asset class he gave us last week, like on Friday? What's wrong with it? Now look at this. It's giving us GBP USD again, and it's telling us something that we are retaining GBP USD, right? Why are we retaining it? All core factor score remains stable with conviction unchanged at 74%. So it's not just something that gives you what to trade and then the following week it gives you another thing entirely to trade, right? It's there's a there's a set historical approach to it also, right? What I'm telling you yesterday, I'm checking it. Is this still valid today? Do you get that? Is this still valid today and whatnot? So it's not just a random tool. It's not a random tool. It's a tool that is carefully set to follow some strict rule. And then the conviction level is set to 65. The lowest conviction you can get is 65. Anything below that is out of it. Anything below that is out of it. So for GBP USD, we are it's telling us to prepare to like we should be looking to buy GBP USD. We'll be looking to buy GBP USD. We're in a bull quiet regime. We're in a bull quiet regime, and then the what's it called, the sizing, our sizing. Say you are someone that trades with say your maximum the maximum per lot sizing you take or something like that is 0.05, then you should be able to confidently take your 0.05. When you analyze, you should be able to confidently take your 0.05, right? That's what this 1.0x means. You should be able to confidently take your 1.0.05 and whatnot. So we have the GBP USD long thesis, maintain structural integrity anchored by the 86 basic points Bank of England to Fed rate differential, creating persistent carry advantage as Bank of England holds their interest rate at 4.50 against the Federal Reserve holding its interest rate at 3.64, while extreme 70% retail short. So the retail sentiment is right now is at 70%. Position provide with reliable contrarian fill for upside continuation against the crowd. So the bull quiet regime with ADX of 30 and ATL 0.85 delivers optimal swing trading conditions with defined trend clarity, controlled controlled volatility, supported by the stable volatility index of 16.89, reducing safe haven USD demand pressures. So right now, for this week, we are looking at GBP USD on a buy contrarian. So these are the 9 factor we run it on. We have the regulatory infrastructure, the macro fundamental scorecard, the structural signality, 15-week strength, and then we have the intermarket correlation, we have the market regime identification, we have the VWAP and volume profile assessment, the COT report, and then the retail sentiment. So it runs it through these 9 factors. It runs it through this 9 factor. Now, the next thing is we are saying is SAUSD. Good. So for SAUSD, the system is telling us we should be looking to buy SAUSD. You can see that it's actually you can see it's telling us something about SAUSD. We should be looking to buy SAUSD. And why is that? SAUSD long thesis anchored by optimal Q1, Q2 seasonal window, historically favorable for good appreciation, supported by a low level rate environment with Fed maintaining 8.64 policy stance and burning volatility index still the same value, right? So that's just the reasoning behind it. That's the reasoning behind it. So we are just adding SAUSD. It was not in our last week, and our last week basket run. We're just adding it. So why was it added to the basket? So factor three, that's the seasonal factor score of what 88. So it is expected that gold is bullish from a 10 years data perspective. It's expected that gold is bullish for the month of May. That's like relative to 10 years data. Relative to 10 years data, right? Relative to 10 years data. It's expected that for this month of May, the gold is bullish. But that does not mean that it would most likely be bullish or not, right? That's just a that's just how will I put it? That's just that's just an hypothesis. That's an hypothesis, right? Yeah, over the last 10 years, gold has always proven to be bullish, right? But that does not mean that, oh, for this year it might be bullish because the regime changes, the relative global event and all of those things and whatnot. It affects the output or the performance at the end of the day. It affects the performance at the end of the day. So these are the reasoning behind it. These are the reasoning behind it. It runs also So we have 80% conviction uh, for this particular gold gold positioning. We have 80% conviction. Then we have the USD card, right? The USD card is 68. We just added the USD card, 68. USD card long thesis derives primary conviction from extreme 81% retail long positioning, creating powerful contrarian fuel for institutional fade opportunity. Supported by structural 89 basic points fed to Bank of Canada rate differential, favoring USD carry dynamics and clean negative correlation against existing GBP USD and AUD USD long, providing portfolio diversification. However, conviction is what materially constrained by weak regime structure, showing ADX of what 19.4 below trend threshold and price below what 200 SMA, that's a simple moving average, requiring what disciplined 0.5x reduced sizing, right? So if you are say you trade your highest lot size is 0.05, right? So if you are going to be entering this particular trade, you should be halving it. So you should be looking at 0.01. If you are someone that trade normally at one lot size, you should be looking at 0.5. Do you get that? So it gives you that conviction, and then it gives you the lot sizing idea. You understand? So, based on this scoring, you shouldn't be risking too much on it. You should risk like 0.5 of your normal risk, of your usual risk and whatnot. So, and then we have the BTC USD, right? So the BTC USD is also having a 68 percent scoring. We are looking at long sideways wave trend, right? That's what it's telling us for BTC USD right now. This USD long test is anchored by a strong contrarian rate of positioning at 74%, short providing for institutional accumulation and short covering rallies, supported by stable risk appetite conditions with what the VIX at 16.89 and improving what macro backdrop as Fed easing cycle progresses. However, convictions remain materially constrained by sideways weak trend regime with ADX at 26 and price below SMA, failing to provide directional conviction, requiring disciplined but zero point 0.5 position sizing, despite otherwise constructive fundamental and sentimental backdrop. So we are retaining BTC USD from last week. From last week, we are retaining it from last week and whatnot. And then the watch list, what we should be monitoring. That's the Euro USD for a possible buy. You can see it's still at the 59 regime. The scoring is 59. So that's why it's just on the watch list. It's not in the basket. It's not in the basket. That's why it's just in the watch list. So let's go on to update our basket. Let's go on to update our basket. And let's go on to update our basket. We have this. Okay, this is not in our basket. GBP USD, SAUSD, and USD card. Okay, USD card. Let's see this USD card. So let's add USD card, and then we have the BTC USD, BTC USD, and that's four. I think it gave us four. Okay, yeah, it gave us four. So something one other thing about it is it does not just give you like 10 or 20. No. So the thing is, as much as you're trying to ensure that you are trading you're trading based on a preset rule, there's also the need to ensure that you're not just trading everything and every like if you are trading too much of the asset, it might lead to confusion. So it just helps you to focus on the maximum of I believe five rule, maximum of five. I believe I set it to maximum of five. It helps you to focus on maximum of five or six, 5 to 6 max. So if it's giving us four, then it means that it's basically more convinced about this four. So that's what we'll be looking at for this week. That's what we'll be looking at for this week. And that's how we've been able to select our asset class. That's how we've been able to select our the forex pair in our asset basket. That's how we've been able to select the forex pair in our asset basket. Okay. So from there now, I think we can go on to now analyze. Can go on to now analyze. Let's start with GBP USD. GBP USD. GBP USD. So I'm going to just be analyzing one pair. I'm going to be analyzing one pair, just one pair, and maybe possibly later in the afternoon we can look at other opportunities. So let's start from the weekly time frame. From the weekly time frame, let's delete all of this. All right. So we are having a possibility of buying according to what NineFactor is saying. Having possibility of buying, and then from the last 5 weeks, obviously the market has been creating new high, new high. From the last 5 weeks, the market has been creating new high. Now, last week's high is here, right here. So this last week high, which is the highest point in the market right now. Let me just capture it quickly. Okay, this last week high. So I'm going to be analyzing GBP USD, and that's all for today. So I just want you to watch it in our asset basket, and then yeah, I just want you to watch it in our asset basket. So we have I 36578, 36578 right there, and then 5 week 1, 2, 3, 1, 2, 3, 4, 5. So this low still remains our low from the last 5 weeks. This low still remains our low from the last 5 weeks. Sorry. So it's going to be like an horizontal. So that's it. We have our 5 week high and our 5 week low from the last 5 weeks. So we are looking at what the market has been doing from the last 5 weeks, and we have that 31759. Okay, so we have our last 5 week high and low. Then we are quite above the high. We are quite above the midpoint of that. We are very much above the midpoint of that. Very, very much above the midpoint of that. Very, very much above it. And then we have it right. This is the midpoint right here. Let me capture this correctly. 759, and this one is at 78. All right. So the midpoint is just going to be at 69. All right. So we've captured it correctly now. So this will be our 5 week high. This is our 5 week high, and this is our 5 week low. 5 week low, and this will be our 5 week midpoint. 5 week midpoint of our 5 week. All right. So from here now, we can see the regime we are trading at, obviously, and then we go to the daily time frame and see what is happening from the last 5 days. From the last 5 days, we have 1, 2, 3, 4, 5, right? So from the last 5 days, obviously, the 5 week high still remains our high. The 5 week high still remains our high, but then we just have this low here as um our 5 days low. So this is the low right here. That's the lowest low from our last 5 days. So we can just set that to the last 5 days, 5 days low. So yeah, so we have that. And from last week trading, we had an AVG right here. So we are looking to buy the market, right? We are looking to buy the market from what we had. We are looking to buy the market. This is what we have here. And then the next thing also is we can get the midpoint of the last 5 days. Can get the midpoint for the last 5 days. Just try and get the midpoint for the last 5 days. Yeah, just try and get the midpoint. So if we do this, and let me just put this correctly. Okay, so this should be coordinate for this one should be 3454. Okay, so that's the coordinates, and then this one should be 3454, and then the I should be 78. All right, so we have the midpoint for that right about here. That's the midpoint for that right about there. So that's our 5 day midpoint. I'm going to change the midpoint color to white. 5 days mid. I'm going to change it to white. The the line color to white, and change this one also to white. I just like setting the image to white, and yeah. So we've marked that on our chart. We have this FVG right here from the daily perspective. So we might take out this midpoint and then come to tighten this one before we continue going higher. That's on the daily perspective. But then we still have to go down to the 4 hours. That's when we start capturing structural breaks and whatnot. And you start capturing structural breaks and whatnot. So you can see this. If we take this midpoint, if we take it down here, we have a good have a good, what's it called, a good resistance that was broken that could have possibly turned to support and all of those type of ideas. And then we have our AVG right here. We have our AVG right here. We have our AVG right here for 4 hours. Look at what our 4 hours AVG is doing. It's coinciding exactly with this midpoint. Our 4 hours AVG is coinciding exactly with this midpoint. You can see that's how you build confidence, right? That's how you build confidence. So you see the conviction level now. We are getting more convinced. Oh, I'm looking to buy all the way from this point back to this high. I'm looking to buy all the way from this point back to this high, right? But I'm still structurally defining my levels. So from the last five for our candle, 1, 2, 3, 4, 5 from the last 4 hour candle, and we have this low as our previous lowest low, but now we are creating a newer one and whatnot. So we are still going downward from here. So we'll go to the 1 hour now. Let's go to the 1 hour and see what the market is doing from the 1 hour trading regime. Now from the 1 hour, you see that let me make something of this. Let me make something of this. This is the daily FVG. Daily FVG. Let me put it to the left. This is the daily FVG, and this is the 4 hour FVG. Let me put it also to the left. Let me make it smaller. Let me make this one also smaller. I don't like the way it's bold like that. It's too big. All right, and then this is the hourly. This is the hourly. This is the hourly. Can I say something about the hourly? The hourly and the daily, they are like exactly the same thing. You see that? So this is the 1 hour FVG. This is 1 hour FVG. Can see that it's exactly the same. So I have to like actually put this on to the bottom, and yeah. So you can see that this hourly and this daily, they coincide perfectly. They coincide perfectly, right? And if let's say we decide to long right here, immediately right here, and then I will set our stop loss right here. So that would be like a 40 pips stop loss possibility, and we are targeting this high. That's a 1 to 2.5, a 1 to 2.51. But that's my trade idea, first trade idea. Then the second one is okay. The market actually dropped up to this point, and then we are putting our risks on the same level also. That's 31 pips, and then we are targeting this high right here. You see that that's a 1 to 3.52 risk reward ratio. So 1 to 3.52 risk reward ratio. So what can we do? What can we do? We can look at, okay, what's the market doing from last week? What's the market doing from last week? So opening into this week, we actually gapped high. We actually gapped high, right? We actually gapped high. Now, uh, we can capture this gap. Can capture this gap um, and use it like to place our next possible trade. Can capture the gap and use it to place our next possible trade. So this is the gap right here. I'm going to capture it exactly. I'm going to do something now, and is this. I'm going to remove the, so I'm going to make this midpoint, um, midpoint. I'm going to rename it. I want to remove the rectangles, and so it's there are 5 day midpoint, and then it's also possible by entry, possible by entry, right? So we have 5 day average and then our possible buy entry, right? That's the conviction for this white point. But I just use the white point. That's a mistake. That's a mistake. That's a mistake. I was looking at putting a new line here. I was looking at putting a new line here, right here. And then let me just do this instead. Let me do this instead. Let me make it broken line. Let me make it yellow and increase the thickness. So that's so let's make that type of line our entry line. Let's define broken line yellow as our entry point, possible entry point. And then we'll look to the left structurally and we're able to know the reason we are picking it. So we don't need to like have it there. We don't need to have it squared there. Um we don't need to have the FVGs being marked out multiple times. Like we don't need that. It's just going to make we're just going to make everything too rough. It's going to make it too rough. So we have our convention right here. That's our first convention. And then this is our second convention actually. It's actually, oh, I see the reason I put it there as possible buy point, right? That's the reason I put it there. So yeah, so we have those 2 points and then we have it as possible buy point. So those are the two we have there. We have those two as our possible buy point. Good. So we have this possible entry here for a buy. So you can see the stop loss is still very much, and then we have this right here for a buy. Now don't forget this is actually educational purpose. This is educational purpose. I'm not trying to like capture what have happened already in the past. I'm capturing what is happening right now in the chat, and then using that to like give you the trade perspective and the trade idea on how you can actually go on to trade it. So for me, I have this the market gap high and whatnot, market gap high and whatnot. I'm not going to try to don't let me say much yet. Let me say much yet. So let's drill down to the 15-minute time frame. And that's when we start looking at, oh, okay, structural breaks and whatnot. That's when we start looking at structural breaks and whatnot. And even possible stronger conviction, possible stronger conviction. So five from the week from the 15 minutes time frame, where you can see that there's no AVG right here. So there's every possibility that we clear even this point from the 15-minute time frame. And then this where the AVG actually is for us for the 15-minute time frame. This is where our possible entry point is for us from the 15-minute time frame. This is our entry point is for us from the 15-minute time frame. If we take it all the way through, yeah, yeah, that's cool. That's cool. So you can see what we have from the 15-minute time frame now. You can see we have like our AVG actually at this point from the 15-minute time frame. So we have our AVG at that point from the 15-minute time frame. I don't want to make it too complex. So let's just keep things. Let's keep things at ease. Let's keep things at ease, guys. Let's keep things at ease. So you're looking to buy. You're looking to buy, but we don't want to do. We're not trying to. No, I'm not trying to catch the bottom. I just saying that this is a possible reversal point. I think I should not say possible buy point. I should just put it at reversal, not possible reversal. When we build more conviction, that's when we can look to buy. Let's just put it as possible reversal. When we build more conviction, that's when we can look to buy. Possible reversal point, and then this. So yeah, we have this as right here, there, right there. So we have that as a possible reversal point. The other possible reversal point where we have here. So we have that as a possible reversal point. So that's what you are looking at now. That's what you are looking at now. Now, in my own perspective, in my own ideology, like in my own idea, I would prefer to pick a buy from here. I would prefer to pick a buy from here rather than all of those places. Stop loss right here, and then go all the way to the top. Go all the way to the top. And what I've been able to do with that is just going to be that I've been able to what? Redefine my risk to possibly, let's say, 20 pips. And then the risk reward is 7.74. Can see that. So based on what we are seeing based on the fact that, okay, we're adding this to our watch list, based on the fact that we're adding this to our watch list. So I've spoken a lot today. Now don't forget, I said possibly I'm not looking to buy here. Possibly I'm not looking to buy here. But for me to be able to actually buy at all, if I'm going to buy at all, it's going to be at this point. Like first risk. Don't forget, look at what I'm listing. Like I've defined my risk already. So if it goes against me, I'm not going to be losing much at all. I'm not buying here. If it reverses from here, I already have what I want to trade it in my mind. But if we get to this point, to this last point, this is the only point I want to buy from. That's the only point I want to buy from. So if I'm wrong from there, then we now start looking for, okay, other structurals and whatnot, So this is actually my first entry point for me. It's going to be my first entry point. Educational purpose. Educational purpose. I'm not showing you any real account I'm trading this thing on. I'm not showing you any real account I'm trading this thing on. So you should not go and just place any trade or whatnot on your end. I'm not showing any way account I'm trading this on. So for the sake of later videos, that I'll be making today, we can go on to do one thing. Um, I go on to do one thing, and that's let's let's carefully let's let me see. Uh, okay. So let's carefully write some things on our chart. So our indicators, right? Our how are we marking our this thing? So we have the orange line, orange line, which is marking 5 week range, and we have the white line, which is marking mid level, mid level, mid level, mid level, and then we have the um, broken yellow line. We have the broken yellow line, which is marking the um, possible reversal, point, and what else? And then we have now what we are using the rectangle for right now is just mark opening gap. The rectangle is marking the opening new week gap. The opening new week gap. So we have the midpoint, which I'm going to use to trade obviously. But that's the markup. That's the markup, right? That's the markup. So we have this. So over the course of this week, we are going to be having that for you to know, oh, why are we using this? Why are we using that? So you can just look at it and then you okay, this was our 5 week high, this was our 5 week low, and all of this type of thing. So yeah, so that's just for GBP USD. I don't think this was a live video. I would have asked, oh, should I do for SA USD or BTC USD? But actually, I'm going to continue on my end and do that. Like I said, I'm not trying to give you entry point. I'm not trying to tell you buy or sell. I'm just giving you like, oh, this how I do it and this how I do it live. This is obviously what I'll be trading and here's why I'm trading it and whatnot. So that's just the trade idea. That's the trade perspective from my own particular end. And don't forget, this is coming. It's coming real soon. Yeah. It's coming real soon. You all should be expectant. Expectant. It's coming real soon. It's coming real soon. So I'm using it already for my personal trading. So over the course of 1 month, I'm looking at getting testers. So if you're interested in testing it, you can reach out to me. If you're interested in testing it, you can reach out to me on the comment section. Just comment interested. Just comment interested and yeah, comment interested and then I'm going to see what I can do from there. Comment interested on the to join. So that means you're interested in joining the testers. So I'm just looking at possible 30 testers. Yeah, possible 30 testers, and that'll be it. So yeah. So let me show you. So let's go back to the dashboard. Yeah. So this is the home. You can see we have the current basket updated. Current basket updated. You can see it's listed in the form of hierarchy. So for this week particularly, I'm just going to be looking at like strongly convinced about SAUSD and GBP USD until otherwise. I'm strongly convinced about this. And then you can see the history. So from when I created the tool till now, so you can see the history. This from 26th of April, this from 1st of May, and now this 4th of May, this 4th of May. So you can is able to like run through it, is able to run through it and whatnot. And we have the calendar. So any asset class you're trading, it ensures that you are familiar with any crucial news that can affect it. Any crucial news that can affect it. Any crucial news that can affect it. So this particular let me I have not done something. Let me reload this first and see whether it has been updated. Let me reload this and see whether it has been updated. Yeah. So I believe it haven't captured. I believe we have NFP for this Friday. I believe you have NFP for this Friday. I haven't captured that yet. I haven't captured that yet. So like I said, it's in a testing phase. It's in its testing phase. So it haven't captured that yet. Let me go back on this. So we have the show, we have the calendar, we have the setting, and then I'm signing out, but possibly not. Yeah, right, not yet. So we have the trade ID on GBP I'm very convinced about GBP based on the tool I'm building, based on the tool I'm building, based on the tool I'm building. So I'm going to be looking at positioning correctly for this week, looking at positioning correctly for this week, and that'll be it. That'll be it. So this is an entry based on confluence. Now, there are more ways you can enter any trade, which we'll be looking at in the next video that will be dropping later this afternoon, possibly, depending on how tired I am. So, that's the first morning analysis and an introduction to a possible systematic tool that would hit the market soon. Yeah, a possible systematic tool that will hit the market soon. Take note of that. It's in the market soon. All right. I'm going to look at SAUSD personally. Don't worry. And then these two are here. They are here. If there's a possible easing level to enter a trade from, I'm going to be doing that. I'm going to be doing that personally also. Well, yeah, there's a lot we are sharing together. So I'm happy to discuss with you all, and I'm really grateful to God for this opportunity. And I just want to tell you to like, subscribe and share with your fellow traders so they can always follow. I'm not trying to tell you that this has happened in the market, this higher low. No, no, no. So we are going to be doing it live. We are going to be analyzing the market live, and then you are going to see the markup and whatnot. And we are going to look at how the market should behave around it. It's a paper trading approach, right? So you are learning. So once whatever you get from here, you can now go on and say, oh, is this correct? Then you demonstrate it yourself. You demonstrate it yourself. And if it comes out right, oh, you can add it to your knowledge basket. And that'll be it. So God bless us all. Happy New Week. Yeah.